Welcome to the Everyday Investor Podcast. Today I'm catching up with Jason Titman, the CEO of Swiftex. They are Australasia's leading crypto platform. They're also a proud partner of the Everyday Investor Podcast. In today's episode, we're going to be discussing recent developments, including Swyftex's acquisition of Easy Crypto in New Zealand, the future of banking, how digital assets like Bitcoin are finding new roles in lending and portfolio strategies, and why regulatory changes matter now more than ever. Now, if you're not already a customer of Swiftex or Easy Crypto and you would like to be one, be sure to use the special referral code in the show notes. And that way you can claim a $20 Bitcoin bonus when you sign up. That's pretty cool. So I hope you enjoyed this episode. And if you are engaging in anything like crypto, just remember, extremely volatile. It is still relatively new in terms of an asset class. And if possible, reach out to a qualified financial advisor with experience in this space before you take action. Let's begin. For those that don't know, earlier on this year, Swiftex announced plans to, acquire Easy Crypto here in New Zealand. And now we have an entity with 1.1 million users across Australia, New Zealand, and South Africa. Is that roughly correct?
It's a couple of 100,000 more than that's probably about nudging over the 1.3 now. We've had a 70% growth in the last 12 months alone, actually. So growing really quickly. And you're right, with the addition of the Easy Crypto customer base in New Zealand and South Africa, probably just over the 1.3 million.
Wow. And considering you are now heading up Australasia's largest crypto platform, my first question is, what would it take to see Swyftx become a bank?
I think that's an interesting question because what is the definition of a bank? We've all grown up with our understanding of what a bank is. I think also we're at that real tipping point with crypto where to date it's been a very speculative asset class, but we're seeing the mainstream move into it, and we're starting to see the use cases for crypto become so much greater in the blockchain. At the end of the day, it's better, faster, and cheaper than the existing financial network that we've got, essentially what the banks are. I'm not anti and against the banks, and I think some of those purists who were early to crypto were that. What I will say though is somebody who's used the banks, in business for the last 25 years, is they are cumbersome, they are inefficient. They provide some great financial support and infrastructure and rails for everybody, but they're just not changing quick enough. And the reality of it is the technology of blockchain crypto has leapfrogged them. So certainly, yes, Swyftx is about becoming a crypto first, global, new age financial services player. I don't use the word bank anywhere in there for a few reasons. But what I do say is that Swyftx started its life as a spot crypto exchange, but we are well and truly moving beyond that. And we will be bringing a number of other products to market to our customers over the next 6 to 12 months that will certainly replicate or look like, many of the products that are existing offered within the banking network.
There's a certain amount of interdependency going on because I guess a business like Swyftx probably couldn't operate without traditional banking services. So as you grow, do you think, or even have you seen examples of where the banks have kind of stifled the ability of Swyftx as a business to grow and to scale?
For most of your viewers, they probably understand that crypto's been around for about 16 years now. It's been growing really fast, but over that time, the banks have tried to block many things, and not just the banks. A lot of other financial institutions and intermediaries, a lot of governments have really tried to stop the stem or the flow of crypto. They found out pretty clearly now they can't do it. And I think there's been a 180-degree shift since the Trump administration has come into power. So I say, despite what you might think of Donald Trump as a person or what you think of the US government's policies, they have been favourable for crypto. So yes, look, therein lies another issue. So many products within traditional finance are siloed. And at the moment, it's been clunky going from the digital into the traditional. It's a clunky change. The frustrating thing, I think, also for me as a digital services provider, is that the technology's there. We have the technology to do almost everything we want. It's requiring the regulatory frameworks in each jurisdiction to catch up. Now, I understand that there's an element of consumer protection. There's zero doubt about that. In fact, Swiftex has been very positive and outspoken in terms of the need, we believe, for regulation, but we want innovative regulation, and regulation that reflects this new age technology in a 24/7 atomic settlement kind of world that we are in. So what I will say is yes, the banks, we have a good relationship with a number of banks. We work very hard with that. In fact, a number of our fraud team work with federal agencies in New Zealand, federal agencies in Australia and in other jurisdictions, and with many of the large banks and financial institutions. And privately, the fraud teams within those banks are telling our people that our KYC, the Know Your Customer, and our AML processes are better than theirs. So that does really frustrate me when I then see those same banks choosing to restrict their customers' deposits onto our platform and other things. So it is a tension that we're going through. It's an unhealthy tension for some players in the space. Yeah. Swyftx, I would say, considers we've got a good relationship, and I don't think that crypto and crypto companies are going to entirely replace banks or the financial system, but I think they're definitely going to be able to enhance it. And those banks and financial institutions that don't change certainly will get replaced. But I think blockchain technology and crypto is about enhancing the experience for users, for businesses. And there's lots of examples. If I go to one, would be the SWIFT network, which is the international payments network. At the moment, there's about 13 steps to transfer your money through that system, 6 or 7 intermediaries. Wow. And it takes a couple of days. It's very hard to actually trace it if you lose it, if ever you've lost a payment through there. And it's up to about 8.35% of the transaction. You know, you send a few $1 million, it'd be thousands of dollars. Yeah. Crypto, and blockchain, because it's peer-to-peer, cuts out that 6 and 7 steps. There's one step, is transferring from myself to yourself or whatever company to whatever company. It's fully traceable on the blockchain. It can be done in a fraction of a second for a fraction of a dollar. Yeah. That's the enormity of it. But when you're cutting out those intermediaries, somebody's giving up profit along the way, and that's what's being fought, and that's what we're all feeling.
Yeah,
so
totally.
That's probably one of many examples.
Yeah. Yep. Yeah. Why would you want to, after spending, in some cases, generations building out an infrastructure, why would you want to just push Control Alt Delete and just restart that and accept this new technology, even though it is better, right? And
that's a frustrating thing, and I get the resistance to change, but we in New Zealand and we in Australia and in most other countries are having this productivity issue. We're debating productivity. Yes, AI will help productivity for sure, but so will crypto and digital assets, and that's the frustrating thing. These technologies are here, but we have people and organizations, institutions that are resisting that change.
Yeah. Taking a slight little tangent here, stablecoins on one hand can be quite useful, and they're a really good example of the incumbent accepting this new type of technology, but it also opens up new areas, I guess, where there can be some abuse of authority. So what are your general views on stablecoins? Do you see any sort of concerns in terms of that privacy risk going forward?
I think stablecoins are going to be one of the big macroeconomic themes for crypto digital currencies in the next couple of years. In 2024 alone, the total volume of stablecoin transactions total value of stablecoin transactions exceeded that of Mastercard and Visa card put together. They are going to profoundly and fundamentally change the way that business to business is done in payments, cross-border payments, and the ability to go for a business in New Zealand that is selling its products into Europe, and a business in New Zealand that might be importing some products from China or the US. that interoperability with and the ability to have a smart contract executed on the blockchain, which will effectively transfer the money when this person does this and that person does that, it is reducing the risks to buyers and sellers all around the world and speeding up transactions. Stablecoins are also helping commodity traders, and it's not just the big commodity trading houses. This can also be your local farmer or your local farming co-op, because it's about the turning of the money on the balance sheet. For me, I like to really look at cryptos as four categories. I look at our blue chips that we talk about, which are that top 10 to 20 that everybody knows. It's on the tip of their tongue. Then we talk about the altcoins, we talk about the meme coins, and we talk about stable coins. So it's those four categories of crypto. The fastest growing and with the biggest use cases is absolutely the stable coins.
Earlier on this year, and I guess full credit to the current U.S. administration for getting behind digital assets to this extent. But we now have the Genius Act, and this effectively requires stablecoin issuers to hold one-to-one reserves in U.S. dollars or short-term treasuries. And for those in our audience who might not know or forgotten, short-term treasuries are government debt, U.S. government debt that matures in 1 year or less. So at the time when the U.S. government is running a multi-trillion-dollar deficit, this whole stablecoin or Genius Act thing has come along at the perfect timing. So you mentioned, that it's probably one of the biggest growing areas. Is that because it's genuinely just better technology, or is this really just the government taking advantage and basically engaging in a trick to ensure that there's treasury demand going forward?
I think that's an interesting question, whether we think our governments would trick us.
Surely
Look,
not.
I think 2 years ago, I wasn't quite sure where the place of stablecoins was going to be against CBDCs, and that being, for your viewers, the central bank digital currencies. That was the narrative 2 years ago. We've had a massive shift away from that. Really, Europe is looking at what might be happened, and Europe has banned USDT at the moment. India is also potentially looking at their own CBDC, but India at the same time for the last 2 years has been the fastest growing adoption of crypto. So it's quite interesting, even though the Indian government is trying to slow things down, how fast it's racing ahead. In terms of stablecoins, I think that there is no turning back with stablecoins now. I think they have just become too large. Tether, which owns the USDT, holds more US government bonds now than Germany. We are seeing a massive shift into stablecoins, and the use case for them is just without doubt. And as institutional adoption comes, we're just going to see stablecoins growing and growing. Back to that whole question, though, was it a genius act by Trump and his administration to the fact that they have opened up the backing of US T-bills, treasuries, on the back of stablecoins? And there's a real question mark if that's what they are possibly doing, because there was a de-dollarization around the world. We've seen BRICS nations. We've seen a move through the UAE. We've seen a move with China and other areas to try and get their own potential stable coin or currency denominated. We've seen, as I say, Europe banning USDT. So we've got some geopolitics, not only at the trade level, but we've got some geopolitics at the sovereign currency level, that people are trying to debase the US currency. We also know that the US just has this massive debt issue and growing. Yeah. So if they are able to move the world into a stable coin that is backed on the US dollar, we may not see the de-dollarization that everybody is talking about, or we'll see it in a different way. And we may see that the US debt is being moved from the government almost to private sector, through the acquisition of stablecoins needing to be backed by US treasuries. I think this is a fascinating area. Is the government trying to hoodwink us, or are they trying to rebase the American dollar, rebase the American debt, and the way it is done? And I think there's a very strong possibility that that's absolutely what it is, what's happening, and it's becoming clearer by the day that that's probably what they're trying to achieve here.
Yeah. It's quite clever, right? Because they are, it's not like the US is unfamiliar with doing some forms of currency resets. Bretton Woods Agreement, 1971 with Richard Nixon, um, Plaza Accords. This is kind of like just another evolution, and it makes a lot of sense because you're solving a couple of problems here, right? Like you're ensuring there's
It
demand
would
for
be the
treasury.
third time
Yeah.
since World War II, effectively, or sorry, since the Great Depression when they had Bretton Woods, and then they had the 1971, move away from the gold standard. This would be the third time the US has essentially controlled global commerce, global trade through the American dollar and through American debt. I think it will be a space to be watched, and it's one that I'm not seeing a lot of coverage in mainstream media. So I think, for your viewers, it's great that you've called it out.
Yeah.
It's certainly something I've been watching, and some industry insiders have been watching, and I think this could be a major trend which we'll start seeing play out.
Yeah. That's probably fascinating as well that it's happening with, the heightened geopolitical activity, because that's often when these things seem to occur. Moving now on to like Bitcoin and Bitcoin backed lending products. I'm hearing a lot more about Bitcoin backed mortgages that are now available in Australia, I believe, with a company called Milo. And in the US, I've spoken with CJ Constantinos from People's Reserve, who do Bitcoin lending products as well. And up to 100% financing, obviously slightly higher rates, risk of margin calls in some instances, but on the other hand, there's the ability now a lot more easily to spend dollars and actually use your Bitcoin and crypto for something useful rather than just sit on it and hope that someone will pay more for it in the future. So do you feel like this is just a bit of a fad, or do you kind of feel like this is the beginning of a significant evolution where Bitcoin is starting to, I guess, create more like a base layer of a new type of financial system?
It is fundamentally, I mentioned earlier how crypto and blockchain is going to profoundly change the world of commerce and the world of investing. We're starting to see it now. There's a couple of things. What we're seeing here is that most of us are pretty bullish about the long-term trend of where Bitcoin's going. So I can hold that Bitcoin, but I can actually then leverage from that Bitcoin and go and buy another asset. Maybe I want to use it for a lifestyle holiday or something, but certainly I could use it for an income-producing asset. I might want to go and buy more crypto, or I might want to go and buy a house or put some money down on starting up a startup business. So I can hold my Bitcoin, which is going up. Yes, it has some volatility, but over the longer term, we can assume that it will continue to go up. I can borrow against that and then use that money into another asset, which is also, hopefully, if I make the right decisions, going to go up. So I'm actually leveraging myself twice. Whereas if I go and just borrow money from a bank, I'm only leveraging myself once, and all that profit's going back into the bank. So I think it's a pretty exciting thing. Now, you mentioned those others. Swiftex is actually on the cusp of launching our own Swyftx loan product as well.
Wow.
So
Okay.
you will be able to hold your Bitcoin with us, and we'll do borrowings. We will only be doing up to 50% of your Bitcoin. I think it's a learning curve for everybody. One thing that Swyftx is very big on is about educating our customers, is about giving them financial freedom. Yes, we could make more money by leveraging it the whole lot out, but it's not something we want to do or think at this point in time is a responsible practice, given the volatility. But we're seeing that volatility come down. Yeah. What you did touch on earlier, and what we're not seeing here in New Zealand, or we're not seeing in Australia, is this concept, though, of the traditional banks lending against it. And I think you mentioned some of them in the US. So in the US, they are starting to look at your portfolio, and they're saying, oh, okay, maybe you've got some real estate, which banks are always love lending against. And maybe you've got a share portfolio, an equities portfolio, and maybe you've got a crypto portfolio with Bitcoin in it. And they are taking that Bitcoin as an asset that can be collateralized and lent against. We're not seeing that in Australia yet from any of the traditional banks, but we certainly are seeing companies like Swyftx being, a crypto-first digital company, which is back to your opening comments about banking services, etc., where we are going to be offering that. Now, there's licensing requirements around it. We're certainly looking at being able to offer this to New Zealand customers as well, but we have to understand where the FIA and where the DIA are at as well, and other regulatory requirements and responsible practices. But the technology's there, and we have the infrastructure, and we built it that we can be offering it.
That's amazing. Bitcoin only in terms of this lending product, or other assets?
At the moment, from a Swiftex perspective, Bitcoin only.
Yeah.
But we think it would make sense that there are other assets where I touched on that blue chip kind of. So Ethereum, Solana, XRP, they are some other assets that we know that people hold large components of those in their portfolios.
Right.
And we know that the volatility of those are coming right down as those assets start to mature. Yeah. So I see in the not too distant future, and maybe we would allow bundling of a portfolio, and we'd be able to do some kind of analysis over there in terms of what we would lend against that percentage. But look, people would always have the opportunity to pay it down, to top it up and stuff. So there's quite a bit of flexibility. But at the moment, only Bitcoin. So we've got a fixed loan where you can take it out for 3 to 5 years. And we're lending up to $5 million there. And then we have more of a trading type of loan where you can take it out like a line of credit, because we're also seeing business operators, a number of businesses have been starting to put Bitcoin through their business balance sheets.
Yeah.
Or individuals, the shareholders of those businesses, particularly when it comes to private companies, have large Bitcoin holdings, but they might need a line of credit in their bank. And sometimes their banks, as we all know, can be quite challenging to get lines of credit when you're operating a small business. So we can lend for that line of credit, and that's a 12-month period. And once again, that's up to, once we assess case by case, but we're lending up to $5 million at the moment as well in a line of credit scenario.
Yeah. That's fascinating, because I guess as more companies, not just publicly listed ones, but just privately held companies, as they decide to hold Bitcoin on their balance sheet, then again, it becomes more than just holding an asset which they believe someone will pay more for in the future. It becomes a tool to actually fund expansion as well in the future.
I think it's cool. I think it shows the innovation that we companies such as Swyftx and other crypto-led companies are willing to do. It's shown a pent-up demand from investors and from customers that hasn't been served by the traditional financial sector. So we're seeing this asset class maturing, and it's frustrating when people say, "Oh, crypto, it's volatile, it's speculative." That's where it started, and there is an element of that still. But we're seeing a number of the crypto projects, and I know you're well aware of this, that have genuine use cases. And in addition to that, what we've been talking about for the last 20 minutes is how the actual currencies themselves start to form an infrastructure layer that enable the transfer of value and transactions to happen. And fundamentally, that's what makes the world go around. And we are able to do it entirely with these new technologies now.
Yeah, adoption will take time. And one of the, I guess, lubricants in terms of adoption, not just with crypto, but with any new investment type, is the financial advice community. And so being a financial advisor who is into crypto, I find myself in a very interesting position in that I'm not allowed to call myself a crypto financial advisor, because crypto isn't legally classified as a financial product in New Zealand, at least, which makes it kind of hard to seek financial advice and do your own research, which is what everybody always says when they're talking about crypto. And then when people go and try and get that advice, they can't get it. So how close are we to a world where everyday people can genuinely receive regulated professional guidance on crypto as part of their investment portfolio outside of these crypto ETFs and other traditionally wrapped crypto products?
I'm glad you've raised it, because this for me is a ticking time bomb for the New Zealand government. It's a ticking time bomb for the Australian government. And it's very frustrating when we talk about it, because both countries have spent the last 30 to 40 years telling the voting population that you should go to a financial planner. And there is so much good advice and guidance that a financial planner can give. But if it's not a regulated product, the insurers won't insure the professional indemnity insurance that financial planners need. It doesn't get on the APL or the approved product list as well, and it's understandable. We've done some studies and some research, and over 80% of financial planners would love to be able to talk to their clients about it. In New Zealand at the moment, there's somewhere around 15 to 17% of people invested in crypto. Australia, it's between 22 and 25%. Studies in both countries show that somewhere between 30 and 40% of the population want to invest in these assets over the next couple of years. At the moment, anybody who wants to invest in crypto and get advice about it is largely going to YouTube or going to TikTok or Instagram. Now, some of the people on there offer some sound advice, but it's unregulated, very hard to control, and unfortunately, many of them are really being driven down particular projects, and you listen to them the next month and they're pushing another project. It's a high-risk area. Why aren't the Australian government and why aren't the New Zealand government getting behind the existing financial planners that they've got and have been supported and have been doing the right thing by doing all of their courses, all of their compliance, and enabling them to? Look, I am pleased to say that the Australian government did finally issue an exposure draft some 6 weeks ago, and we've now made comment on it, and we are hoping that early next year in 2026 that there is going to be legislation put before Parliament, but there's still a way to go, and then there'll be a grandfathering provision for that. New Zealand is a little bit behind in that. So I'm really passionate about anybody undertaking any financial transaction should be seeing a financial planner, and it does frustrate me, as you can probably gather, and your listeners can gather, that our governments haven't done more to protect the consumers, and that's what it's about. I mean, that's what we really expect governments. I'm not a legislation person. I don't like more regulation for the sake of it. I think we've got too much of it. I think we should be giving less. But there are times and a place, particularly around financial services and protection of consumers, that we should be giving some more, and this is one of those examples.
Yeah, totally agree. Why do you think they are reluctant? Like, I'm talking specifically about regulators, but let's throw incumbent financial institutions like banks into the mix here as well. Why do you think there is this resistance to kind of going first? Are they underestimating just the speed at which things are happening?
I think you're right. To be fair to regulators and to be fair to government, I don't think they will ever be able to keep up with the speed at which new technologies are introduced in. They can't be expected to. But there's no doubt that they are too slow. Crypto's been around for 16 years now. Unfortunately, politicians and the way our political system is set up, they are about getting elected next term. There is not the long-term thinking that needs to happen. So they don't like to take on these hard and challenging topics. I think that's irresponsible of them. So there's an element of it where they are moving too slow and they're not trying to make, they're not making the decisions quick enough.
Yeah.
You touched, though, on the traditional institutions, and once again, not defending them, but there's two components that I would say there. One, they are built on legacy systems. It can be done better, faster, and cheaper with blockchain and crypto. There's no doubt about it. But it does in the main work, and most of us come from a point of resistance. So, we don't want to change unless we have to change. So I think there's some fundamental reasons. But I also touched on it earlier. They don't want to lose the profit that they're making along the way. And by the very nature of this beautiful technology which comes through and will strip out layers and layers of profit, it will make society definitely more efficient and more productive. It will save a lot of people a lot of money, but those institutions typically are going to miss out. So there are definitely some competing interests. So we don't have to rebuild everything. And I think sometimes if they get their head out of the sand and look at the big picture and the macro level, you can start there. It doesn't have to be perfect. It's a bit like building a technology company. Don't let perfection get in the way of progress. governments and regulators have a level of responsibility, but let's get the base layer in first. And if you feel you need to build upon it, you can build upon it.
Yeah.
That would be the way I would come, and an outcomes based policy and an outcome based regulation. I think if you start from this, we're going to regulate everything and tie everything down, you won't get the innovation, and you won't get legislation in speed. Let's try and reframe it to an outcomes based approach.
Yeah. Every single New Zealander has had a gutsful, for example, of the banking profits that seem to be collected from our banking community here in New Zealand. And the solution is here. The solution is to use digital assets, cryptocurrencies, which are far more efficient, and support companies that are innovating in that space, in the financial services space in particular. As people vote because they're choosing something better, then naturally that's easy for them to put pressure on politicians, which then makes it obvious that there's actually an objective that we're trying to get. We're trying to save money. We're trying to keep more of those profits here in New Zealand. But it seems like it always comes down to that education, that people have to be educated first, that crypto isn't necessarily a scam. Yes, there are lots of scams within it, but it's not necessarily all bad. There's some really good bits of technology in there that can really help make people's lives better, but they need to actually, understand it. And so what kind of initiatives are Swyftx involved in terms of the education piece? Because I think that's going to be really, really important here.
I do like to try and educate people. I know many of your viewers are probably quite educated in crypto because you've been a great supporter of it. I think it's very valuable that as a financial planner, a financial advisor, you are, and any of your clients and listeners are really lucky that you've plugged in and got that open mind.
Right, thank you.
So I'm very happy having conversations more broadly to people to help them understand it. Swyftx has an education component on it on our website. We're always updating new education modules that people can work through. We're spending a lot of time with regulators and politicians in every country that we are entering into, talking through, listening to them about their concerns, but also talking them through crypto. We have our teams, I mentioned earlier, with our fraud teams, our financial crimes teams, and our compliance teams, spend a lot of time that we don't get paid for. Working with the New Zealand Federal Police, Australian Federal Police, working with regulators. In Australia, we've got the NASCAMS, which is the National Anti-Scams Committee. We have members that contribute to that. So we put a lot of time in as well, just helping educate law enforcement, educating regulators, and educating traditional financial players in the banks. We now offer derivatives for wholesale or sophisticated customers. But we're doing that at 5x leverage.
Okay.
Many of the overseas exchanges are offering up to 100x leverage. I'm not too sure how many of your viewers understand that, but I think 20 times the 5x that we're doing. One would have to question whether that's responsible. Yeah. I know there's demand out there for it, and I know those exchanges are making an obscene amount of profit from it. But people are going to get wiped out along the way. There's always risks, but so that's another thing that Swyftx is holding back. We are trying to offer products that are needed, but in a very responsible way. And sometimes maybe not making as much profit in the short term as some others, but we see ourselves being longer term. Yeah. Just as we're investing very heavily in compliance, AML practices through our regulators as well. So that's and the counterterrorism, those sorts of measures we also see as trying to be very leading in that space.
Got it. Awesome. Okay, little bit of a tricky question, I guess you could say, because of the position that you're in. Bitcoin versus crypto. I'm not going to get you to answer that question, by the way, but
okay,
don't worry. But 10 years from now, if we're just thinking, hey, it's 2035, what does Bitcoin look like relative to thousands of other digital assets and even state-regulated programmable tokens and other digital assets? What would you say to that in terms of not just the price necessarily, but the products, the services, the reality that looks like in 2035?
Look, I might come at that from two angles. Certainly from a Bitcoin perspective, I think Bitcoin's still going to be around. Even though we've had 3.8 million% increase in the last 16 years since it was first, conceptualized, I don't think we're going to see that rate of growth. In fact, I think the percentage increase and the volatility each year is going to get less and less. I think Bitcoin is going to be an incredible store of value, and we're going to start to see it transition from the OGs and the original people that have bought a lot of Bitcoin at very cheap prices. So you're going to start to see it transition, and it'll transition into institutions, not only but mainly institutional investment, both as digital asset technology companies, so companies that are just purely focusing like Strategy and others that are starting to really focus just on Bitcoin. You're going to see it bought directly. I mean, remembering there are only 21 million of them, so it's going to have that limited supply. I don't think at the moment, and they tried with the Bitcoin Lightning Network, and it might. So I don't know whether Bitcoin itself, beyond a store of value, where it's going to go in terms of into commerce and into trade. We touched on earlier stablecoins. So I think agentic commerce, smart contracts, programmability and everything is probably going to see the efforts directed into the likes of stablecoins. And maybe there are some of the other currencies that were originally designed for payments, XRP and some of those, that might actually see their use cases changing a little bit more or continuing to get invested in. The layers that we've got with Ethereum and what it's used for. So I think the verdict is out with some of these because technology often leaps technology. I think Bitcoin is by far and away something that is unique and will remain that long-term store of value, and particularly as we start to see governments adding it to their treasuries and the likes as well. It'll be interesting. But like I said, I don't see Bitcoin's use cases being invested in heavily, other than that long-term store of value. I think it'll be some of the other cryptos that their use cases will start to get invested in, and we'll see them permeate themselves through layers of commerce, permeate themselves through other different layers of investment. So if that gives you a little bit of a flavour of where I see things happening, I do see that tokenization is probably something we haven't really touched on much, and that's what you're going to see. You're going to see the ability for every asset in the world to be tokenized, so to be digitized and traded 24/7, which at the moment it's not. On our traditional stock exchanges, they are like a 9 to 4 kind of trading scenario, 5 days a week. So with the tokenization of assets, the digitization of assets, we're going to see 24/7 simultaneous, autonomous, be careful using those two together, but effectively settlement 365 days of the year. We're going to see the fractionalization of assets. Now, there's practical considerations, there's legal contracts and everything which need to wrap around all of this because there's some complexities, but we're going to see large infrastructure projects, large buildings being tokenized, and I can buy small components and small pieces of them like I can with shares, which are really a fraction of a company. So that fractionalization, tokenization of securities is already starting, and the real world assets, or the tokenization of assets, is going to start happening a lot quicker. So I think that's another big trend that I would say that you're going to see in the blockchain. You're going to see it. You'll also see, and I touched on it, agentic commerce and the programmability with AI and smart contracts. You're going to start seeing that AI bots will be making investment decisions for people. You're also going to see that AI and programmability of smart contracts and crypto may end up negotiating. So if we want to buy a house, maybe I'm actually turning the programmability of my crypto and my AI agentic commerce, and they're doing the negotiations, I'm not doing it, and then they come to me for the final decision. So I think some of those sorts of things as well are very exciting. NFTs are something that took off in 2021. They've really died. I think they're going to come back. And I think they're going to come back in a different form. We'll still see the art and pudgy penguins and all these different kind of crazy things that we've seen. But I think what we'll see, particularly for retailers, for example, we'll see an NFT that they might start to be able to trade. So as a VIP customer, I might get issued this NFT that not only does that NFT give me special access rights to some sporting events, special access rights to new products which are released, and they've got full trackability of me, and that's what I'm getting as a VIP. But maybe that NFT will go up in value, and maybe I will be able to have a right to sell that NFT or pass on that NFT. These are the sorts of exciting things that I think that the blockchain and crypto will enable. So, sorry if I moved off a little bit just Bitcoin, because I think I did explain Bitcoin, but I see all of these other components of crypto starting to permeate the commerce and investors' lives in the coming years.
That's fascinating. So even if a fraction of what you're saying comes true within 2035, it's going to mean that wealth kind of takes on a new form, right? Where it could be anything that's of value, could be used as some form of currency, and maybe this wealth just moves around the economy so much faster because the liquidity problem is solved. Like, I just think of houses right off the bat.
It's the solving of the liquidity problem. Money is going to move around the world so much faster. You're going to continue to see, I mean, look at what's the S&P 500 going up at 6% a year or something like that. The last 16 years, Bitcoin's gone up 80% year on year or something crazy like that. Now, I've heard predictions it'll continue for the next 10 years going up 20% year on year, which is still a lot more than the S&P 500, for example. NASDAQ, ASX, whatever we want to look at. So people are actually they're getting ahead a lot faster. There are some people that are getting ahead a lot faster. We're seeing the whole of commerce changing radically. So it's a super exciting piece. We're seeing intergenerational wealth transfer. We're seeing that the grandchildren of family offices and wealthy families are starting to say to the grandparents, as they look at planning down the track, they're starting to say, we want a portion of the investments that you're doing with the family office money, our future, into digital assets.
Yeah.
So we're starting to see that. I say we're running in two parallel universes now.
Yeah.
And crypto and digital over here, I know a lot of people drink the Kool-Aid, but certainly we are running in two parallel universes. And back to my point with you earlier, I think there are not enough people with experience like you've got, not enough accountants, not enough financial planners still at the moment that are leaning in to really understand this asset class, because there's a new breed. And the millennials and the Gen Xers have certainly really embraced it.
Yeah.
But what we're seeing is the 45, 50-year-old plus who's had an executive career, run a successful business, owned property, that are starting to transition or migrate a portion of their portfolio into crypto. So things are really changing. The pace has picked up. Even in my few years of crypto, things are really picking up. And I think it's only going to accelerate, even though the market will enter some kind of bear market, at some point in time. Again, that's what markets do. Yeah. The overall prognosis, we are at such an early stage of where this industry is going to be in 10 to 20 years' time.
Yeah, fascinating. And with what I've read, it sounds like there's quite a lot more functionality and services that are going to be rolled out over the next little while. So yeah, what would you say to the existing Easy Crypto and Swiftex customers here in New Zealand in particular?
We are trying to be very New Zealand centric with it. It's a working together, a coming together. So we will always have a solid team of people in New Zealand, and we will continue to invest in that from that point of view. We want New Zealanders servicing New Zealanders. What it does do, though, in practical sense, we become a custodial provider. So there's a different way and a smoother way, I would argue, of operating and controlling assets. We also taking from sort of 160 odd assets up to 440 assets at the moment. So there's a lot more, and that's just at the moment. As Swyftx grows to become that global company as well, but very APAC focused and ANZ focused, and always will be. We always intend to have our base here in the ANZ region. But we offer global liquidity, and we get access to global liquidity, cheaper trading fees, which is always important, but security as well. As we start to build economies of scale over a larger group there, we can also bring in a higher level of security practices. And that's not only strength of our own balance sheet, it's the cybersecurity, posterity, etc. It's the economies of scale that we are able to bring in terms of the education piece and the learning piece. So that's what I would say is that it's a multi-layered opportunity for Easy Crypto customers to be part now of the Swyftx group, while retaining that really New Zealand centricity, and that's something we're always going to be doing. We've invested a fair bit with the New Zealand Warriors and also the Super Pacific Rugby in New Zealand, and we're continuing to look for sponsorship opportunities over there as we try to engage more with the New Zealand economy, and doing podcasts like this. There's a number of crypto conferences next year. There's Crypto Winter again, particularly an industry one, and then there's New Zealand CryptoCon, which is happening, and Swyftx is sponsoring both of those again next year. So yeah, we're trying to really lean in and support the industry, because we want to see the ecosystem in New Zealand grow, and we want to offer New Zealand customers of Easy Crypto and Swyftx this real homegrown local opportunity to play on the global scene. And I think New Zealand as well, from a business perspective, has had a number of technologies that have become global winners. One that comes immediately to mind is Xero, but there's been a number of others. And I think, Easy Crypto coming together with Swyftx really is another exciting opportunity for a New Zealand company to be part of another global success tech story.
Yeah. Awesome. Well, Jason Titman, thank you very much for having a chat with me today. There'll be obviously a link in the notes that people can click on to sign up to Swyftx if they're not already an Easy Crypto or Swyftx customer. So thank you again, and we'll catch you again on another episode, hopefully.
Fantastic. I've really enjoyed the conversation today, Darcy. So thank you for your time.
No worries.
And thanks, listeners, for listening in.